Welcome to World Updates Hub. Subscribe and press the bell icon for more updates. A financial earthquake rocks the globe. The world's markets tremble as news breaks, sending ripples through every major financial center. Investors, economists, and ordinary people alike are left wondering what comes next. Riyadh, August 28, 2025. Saudi Arabia stuns the world by announcing it will accept Chinese yuan for oil sales, a move that instantly grabs headlines and ignites debate across continents. For decades, oil was priced exclusively in dollars. This petrodollar system wasn't just a financial arrangement, it was the bedrock of American economic dominance, supporting the dollar's status as the world's reserve currency and giving the US unmatched global influence. Now, with Saudi Arabia, OPEC's leader, breaking away, shockwaves are felt from Wall Street to Shanghai. Markets reel as traders scramble to assess the fallout, and governments worldwide call emergency meetings. The official reason? To diversify partnerships and strengthen ties with China, now Saudi Arabia's largest trading partner. But this is more than just business, it's a strategic pivot with global consequences. The subtext is unmistakable. This bold step is a direct response to years of rising tensions with Washington, especially after sweeping tariffs and economic pressure from the Trump administration. The relationship between the US and Saudi Arabia has been fraying for years. Riyadh's move is more than a financial decision, it's a declaration of independence from US policy, a signal that Saudi Arabia is charting its own course in a rapidly changing world. The world holds its breath. Is this the beginning of the end for the dollar's reign? People everywhere anxiously watch the news, aware that the consequences could touch every corner of the globe. The dollar's stability underpins everything from gas prices at the pump to the value of retirement savings and the cost of groceries. A shift in its status could mean higher prices, market volatility, and uncertainty for millions. By challenging the dollar, Saudi Arabia is pulling a thread that could unravel the entire post-World War II economic order. The system built at Bretton Woods, which has shaped global finance for generations, now faces its greatest test. This moment isn't sudden or isolated, it's the result of years of shifting global power. The rise of China as an economic powerhouse, Russia's resurgence on the world stage, and the assertiveness of middle powers like Saudi Arabia have all contributed to a new, unpredictable era. Together, these forces have created a complex and volatile landscape, where old alliances are questioned and new partnerships are forged. With this historic move, Saudi Arabia signals to the world, the old rules no longer apply, the global order is shifting, and the future of the dollar and the world economy hangs in the balance. The financial markets reacted instantly and brutally. Within minutes, the atmosphere on trading floors around the world shifted from tense anticipation to outright panic. Traders shouted into phones, desperate to make sense of the chaos unfolding before their eyes. The Dow plunged over 1,000 points in an hour, its sharpest drop of the year. Screens flashed red as sell orders overwhelmed the system, and investors watched in disbelief as their portfolios shrank by the second. The dollar tumbled, losing ground against nearly every major currency. Meanwhile, the Chinese yuan, now dubbed the Petro-Yuan, soared to record highs, signaling a dramatic shift in global financial power. Investors scrambled to reassess portfolios in a world suddenly full of uncertainty. Financial advisors fielded frantic calls from clients, while hedge funds raced to adjust their strategies in real time. Brent crude oil prices spiked, surging past levels not seen in years. Gold soared past $2,500 an ounce as investors fled to safety, seeking refuge from the storm in traditional havens. Central banks held emergency meetings to stabilize currencies and prevent meltdown. Finance ministers convened urgent talks, searching for ways to restore confidence and stem the bleeding in global markets. In Washington, outrage erupted. Some called for sanctions on Saudi Arabia. Others blamed US trade policy for pushing an ally away. The halls of Congress echoed with heated debate while protesters gathered outside demanding answers. The White House promised to protect American interests, but the damage was done. Officials struggled to project calm, but the sense of crisis was unmistakable. The aura of dollar invincibility was shattered. For the first time in decades, the world questioned whether the greenback could remain the bedrock of global finance. European leaders eyed a bigger role for the euro. Moscow praised Riyadh's move, seeing an opportunity to expand its own influence. New alliances began to take shape as the balance of power shifted. For many, this was a bold challenge to US financial dominance. the world watched as the foundations of the old order trembled, uncertain what would come next. The old certainties of the global system were suddenly in question. As night fell, a sense of unease lingered. A new era had begun and no one could predict where it would lead. To truly understand the shockwaves rippling through today's financial world, we need to rewind to the early 1970s, a time of immense global change and uncertainty. In 1971, President Richard Nixon made a historic announcement. The US dollar would no longer be backed by gold. This decision sent global finance into turmoil, as the world's economies scrambled to adapt to a new reality where the dollar floated freely. Just 2 years later, the 1973 oil crisis struck. Long lines at gas stations and soaring prices exposed the West's deep dependence on Middle Eastern oil, highlighting a vulnerability that demanded urgent solutions. Out of this chaos, a groundbreaking agreement emerged. The United States and Saudi Arabia forged the petrodollar system. Saudi Arabia would price its oil exclusively in US dollars, and in return, the US would provide military protection and economic support. The kingdom then recycled its vast oil profits by investing heavily in US Treasury bonds, creating a powerful self-reinforcing cycle that tied the two nations' fortunes together. This arrangement transformed the dollar into the world's primary reserve currency. Any country needing oil, essentially every nation, first had to acquire US dollars, cementing America's financial dominance. Soon, OPEC nations followed Saudi Arabia's lead, further entrenching the dollar's central role in global energy markets and international trade. This gave the US unprecedented power. It could finance government deficits at low cost and use the dollar's dominance to impose economic sanctions on rivals with remarkable effectiveness. For Saudi Arabia, the pact guaranteed not just security, but also a leading role in global energy markets, ensuring its influence and prosperity for decades. For 50 years, this alliance has anchored the global financial system, shaping the flow of money, energy, and power across continents. The petrodollar system effectively replaced gold as the bedrock of American economic might. Both nations reaped enormous benefits, until now, as new challenges emerge. Today, for the first time in half a century, that system faces its most dramatic and uncertain test, a break that could reshape the world's financial order. The petrodollar gave the US what Valéry Giscard d'Estaing called an exorbitant privilege. America could run deficits and print money with little consequence as global demand for dollars stayed high. But for other nations, this felt like economic imperialism. They were forced to hold reserves in a currency controlled by US policy. The Fed's decisions could trigger crises abroad, fueling resentment among rising powers like China and Russia. The US also weaponized the dollar, using sanctions to cut off adversaries from global finance. This made many countries nervous. Their access to the world economy depended on Washington's favor. Quietly, nations began seeking alternatives, currency swaps, diversifying reserves, and using euros, yen, and yuan. These were small steps, but all pointed to a desire to escape dollar dependency. The cracks in the petrodollar world were growing. The foundation of US financial dominance was no longer unshakable. The US-Saudi alliance was always uneasy, but Trump's America First policies changed the game. Aggressive tariffs hit not just rivals but allies, including Saudi Arabia. For Riyadh, these tariffs were a direct blow, especially as it tried to diversify its economy. Doubts grew about America's reliability as a security partner, especially after muted responses to attacks on Saudi oil facilities. The old oil for security bargain was fraying. The tariffs became the final straw, signaling a fundamental break from decades of cooperation. Saudi Arabia felt betrayed by the very partner it had supported for 50 years. The decision to embrace the yuan was the culmination of years of frustration. At the center of this shift is Crown Prince Mohammed bin Salman and his Vision 2030 plan. He aims to transform Saudi Arabia into a diversified modern powerhouse, less dependent on oil, and less reliant on the US political volatility in Washington made long-term planning risky for Riyadh. The recent tariffs threatened key investments and supply chains. MBS decided true sovereignty meant diversifying both economically and geopolitically. Accepting yuan for oil is a calculated move. It deepens ties with China, signals independence to Washington, and attracts new investment. The goal makes Saudi Arabia a pivotal player between East and West, not a client of any one superpower. The Petro Yuan is the boldest sign yet of this new assertive Saudi strategy. China's rise as Saudi Arabia's top partner was no accident. It was a patient, strategic effort. China became Saudi Arabia's biggest trading partner, investing billions in mega-projects and infrastructure. Unlike the US, China offered capital and technology without political strings. Chinese firms built Saudi 5G networks and invested in Vision 2030 projects. Beijing also provided advanced military tech the US wouldn't sell. The Shanghai International Energy Exchange allowed oil to be priced in yuan, making the Petro-Yuan possible. China didn't force the issue, it simply built a more attractive alternative. When the time was right, Saudi Arabia made the leap. Saudi Arabia's move has upended global alliances. Oil producers like Russia and Iran, eager to escape US sanctions, will likely follow Riyadh's lead and embrace the Petro-Yuan. Other Gulf states, torn between US security ties and Chinese trade, will tread carefully, perhaps accepting yuan for some sales. The Gulf Cooperation Council's unity will be tested. Europe may push for a bigger role for the euro, fragmenting the currency landscape. Emerging economies like India and Brazil could gain flexibility by trading outside the dollar. Washington fears a domino effect. As more countries shift to the yuan, demand for the dollar drops. That could mean higher inflation and interest rates in the US, weakening its global power. The Saudi move won't topple the dollar overnight, but it's cracked the foundation. The world is now free to diversify away from the dollar. The dollar's demise won't happen overnight. The global system has inertia. The dollar is still deeply embedded in trade and finance, and US markets remain the world's most trusted. The yuan faces hurdles, capital controls, limited convertibility, and tight government management. Until China opens its financial system, the yuan's global appeal will be limited. More likely is a multipolar world, the dollar, euro, and yuan each anchoring regional blocks. Trade and reserves will be more diversified, reducing any one nation's privilege. This could make the system more resilient, but also more complex and unstable. Exchange rates may fluctuate, creating new risks and opportunities. The Saudi decision hasn't ended the petrodollar era, but it started the clock on a new, uncertain, multi-currency world. The rules of global finance are being rewritten before our eyes.